Welcome to the September Market Thoughts video. My name is Maria Considine King, and I'm joined by Brad McMillan, Chief Investment Officer at Commonwealth Financial Network. Brad, August was not a great month in the equity markets, with several factors weighing down performance. What are the key elements that will influence the markets going into the fall?
There were several risk factors that came back into the public eye in the past month. The first, and I think the most significant, is rising interest rates. The Fed at this point does look like it's going to start tapering in September, and that's going to potentially drive interest rates even higher, or at least that's the market's perception. The other things that have come to the fore, though, are the debt ceiling, which is going to be a problem. Remember, the last time we went through this, it very nearly became a train wreck. That potential is certainly there again, and investors recognize that. Second, we've seen geopolitical risks dial up again. We've seen Egypt potentially threaten the Suez Canal. We've seen Syria continue to deteriorate. All of a sudden, investors are looking around and saying, wow, this is a much riskier world than we thought it was. And none of those issues are going to go away.
The bond market didn't fare much better than the equity market in August, and September isn't expected to be much better when the Fed is expected to reduce its bond buying program. Is there a reason to be optimistic about bonds?
The narrative that's really out there is that interest rates are on an unstoppable march upward. I think over time that's probably true, but in the shorter term I think you're going to see a lot more up and down movements than the market is pricing in. Right now, the Fed is expected to start tapering, and everyone is positioning in advance of that. But what happens if we get a classic market maneuver of sell on the rumor, buy on the news? You could easily see interest rates tick back down once the tapering becomes a fact rather than a rumor. I'm not saying that's going to happen. I'm just going to say that based on history, interest rates have tended to stay at quite low levels for a long time. I also know that the Fed is very committed to keeping rates low. All of that considered, I don't think we necessarily are looking at that unstoppable move upwards for rates, at least not on an ongoing basis.
Internationally, emerging markets seem to be struggling, and Europe seems to be stagnant. Do you expect investors to return assets home from abroad?
What's interesting about the international markets are increasingly the developed markets, the US, Europe, are being seen as the growth story going forward. We've seen India suffering from that. As real interest rates in the US start to go up, you're going to see it become a much more attractive destination for capital. So we could very well start to see, and in fact we are seeing, capital repatriating to the developed markets. At the same time, you can look at the valuations of those markets and say, wait a minute, we're actually getting a really good bargain in many of them. So that being the case, in the short term, I do think you're going to continue to see that. In the longer term, that might not be the best investment move.
With all that has transpired in the past month, what does this mean for the US markets going into the autumn?
A lot is going to depend going into the fall what happens with the debt ceiling debate. That is the premier risk going forward. I believe it can and ultimately will be successfully resolved, but based on history, it's not going to happen until the last minute. I think the other risks that we see out there are Europe. Europe has actually started to improve, but improve is not the same as do well, and there are very serious political risks still pending. I think the next potential real risk issue out there could be the emerging markets. We are seeing cracks. So there's more than enough risks out there to keep people on their toes, and I think going forward that's going to be what's important to watch. I think the presumption now is that we have to be more careful than perhaps we have been over the summer.
Thank you, Brad.
Thank you, Maria.
And thank you. Please join us next month for the Market Thoughts video.